Elon Musk and Tesla, you don't want to compete with those folks, okay? Lucid, their earnings just came out a few hours ago. I want to go ahead and react to this clip from Fast Money here. And what we're going to hear is Lucid is an absolute dumpster fire right now, okay? Lucid is a company, an EV company that has attracted a lot, and I mean a lot of investors to it over the past couple years. A lot of people looking for the next Tesla, right? And they look at their lineup, they look at their website, they're like, oh man, maybe this could be the next Tesla. Why does everybody want the next Tesla? Let's be honest, okay? Tesla's a stock that since its IPO over a decade ago is up over 10,000%, right? And it changed a lot of people's lives, including somebody like myself, right? It was a millionaire maker stock, or for some folks, it was a multi-millionaire maker stock, right? Those sorts of companies rarely come along. And so everybody naturally starts to look for where's the next one? Where's the next Tesla? And a lot of people have been attracted with Lucid, okay? We'll get into their numbers here. I want to react to this. It's a mess. And then I want to share some other thoughts on what's going on here with Tesla versus them. And also, if you are looking for another opportunity, I think if you're going to look outside of Tesla, there's only one stock that even remotely interests me, and I'll tell you why that stock interests me versus something like a Lucid in a huge way. So appreciate everybody joining me as always. Thanks for being subscribed, folks. 26,600 plus subscribers. And also, let me say this real quick here before we get into this, okay? If you own Lucid stock, do not feel like I'm ever putting you down or making you feel bad or something like that. I have no interest in doing that. But we got to call a winner and one that's losing bad and will potentially be facing bankruptcy. We got to speak that real about that, right? It's no different than if you watch a football game and one team wins 50-0, which the team is Tesla and Lucid's the one that's at 0, right? It's not like you're making fun of it. It's just you're calling it is. Like, this is the score of the game. It's going really bad for this team, and they've lost, okay? So let's get into this.
Maintaining delivery estimates at the lower end of guidance issued earlier this year. The conference call just getting underway. Actually, we'll get underway just minutes from now. Phil LeBeau's got more on this. Phil.
Listen, not a lot to like in the first quarter for Lucid. As you mentioned, they missed on the top and the bottom line, losing 43 cents a share. The street was expecting a loss of 41 cents a share. As you mentioned, revenue well short of expectations. And it raises the question, really, what happened in the first quarter? I had a conversation with Peter Rawlinson, CEO of Lucid, and he said, look, there were a couple of main factors that the share. The street was expecting a loss of 41 cents a share. As you mentioned, revenue well short of expectations. And it raises the question, really, what happened in the first quarter? I had a conversation with Peter.
Look at this, okay? Look at this. That is a disaster. This is supposed to be a growth company. They came in with $149 million of revenue. 210 was the estimate, and believe me, those estimates have been coming down and down and down for like a year now, okay? And to come in with that staggering of a miss, run that on a percentage basis on how big of a miss that is. I mean, my gosh, that's like a 25%, if not over a 25% miss. It's a disaster, folks. It's it's approaching a 25 to 30% miss on revenue. Complete, utter disaster.
CEO of Lucid, and he said, look, there were a couple of main factors that caused them to have lower production and lower deliveries in the first quarter relative to the fourth quarter, a slow January. And he said, January is typically slow in the auto business. I said, yes, but I've not often heard that as the main reason for a miss in terms of quarterly production and so forth. And then he said there was the EV tax credit ending. Remember, it used to be, prior to the IRA tax rules going into effect, that you would get a $7,500 federal tax credit. Now the Lucid models are too expensive for that to apply. He said those two combined to have an impact in terms of production and deliveries in the first quarter. And now it brings up the question of guidance. They are planning to build at least 10,000 vehicles for 2023. Remember, the guidance at the end of the fourth quarter was for production of between 10,000 and 14,000 vehicles this year. They're no longer giving that higher end of saying they could hit 14,000. So that's a slight tweak in terms of their guidance. And they now say their liquidity is enough to last into the second quarter of 2024. Previously, they said they had enough to get into the first quarter of 2024. Now they've pushed it into the second quarter of 2024. By the way, they're sitting on 4.1.
For anybody that's new to the market, that you're like, what does this mean? Like, they have enough liquidity to make it to, around this time next year, essentially, right? Basically, based upon their cash burn and what's going on with this company, they could go bankrupt unless they raise a bunch more money, which they could dilute shareholder value, which when your stock's going down in this price, it gets harder and harder to dilute shareholder value and raise money that way. You can take out debt, but Or is a bank going to loan Lucid a bunch of money, especially if they are showing no signs of profitability anytime soon? Because if you, let's say you're a bank, you loan Lucid $1 billion, $500 million, first off, that's not going to get Lucid very far with how much money they're burning. And then if you loan them that money, are they going to even pay it back? Or are you going to take a $500 million, $1 billion hit on that? And so these are things that makes it very difficult for a company like Lucid to continue to survive, folks. And that's an important part.
$1 billion in liquidity. I asked the CFO if they have the option in terms of, are they looking at the prospect of raising more capital? They said, there will probably be more capital that will be needed in the future. No plans to announce as of right now. But the bottom line is this, Melissa, there is nothing really to hang your hat on in this first quarter with production and deliveries coming in lower than in the fourth quarter.
Wow. Phil, keep us posted. Phil Lefebvre, conference call again gets underway in just a few minutes for Lucid. That's a terrible excuse. Seasonality for the car industry? I never heard that before.
Well, especially while you're trying to ramp up and it's not about...
Right.
Yeah,
There should be like an excitement factor. People are waiting for this car to come out. It's slow. January's slow.
Production and deliveries where Phil left off. For a company that's in the phase that Lucid is in right now, you can't be missing on both those fronts. We saw that with Tesla years and years ago. Now Tesla has become an extreme case to the side of success, but the stock is still tremendously volatile. So Tesla, you're going to be talking about energy production along with deliveries, and that's a two-pronged thing that no one else has.
Yeah, and then in terms of the capital raise, I mean, maybe they're hoping that interest rates will fall and then they can issue some debt then. I mean, Guy, I don't know. Its options seem to be not that long, at least now for the next year.
So Lucid is planning on hopefully selling 10,000 vehicles this entire year, right? And, like how fast does Tesla sell 10,000 vehicles? You know what I mean? Like you could do the math on it, what your delivery estimates are for Tesla this year, right? And divide it out by 10,000 and, see how many times they sell the 10,000. I mean, it's the scale that Tesla's at this point in time is just totally night and day different than somebody obviously like a Lucid. But look at the deliveries here, folks. Look at the deliveries. Q1 deliveries, 1,406 versus 1,932 was... You know what I mean? Like it's a complete and utter dumpster fire over there.
Think of something.
Second quarter 24 will be here faster than people realize, number one. So that cash burn is going to happen. They have to do it. I mean, they basically said it. We're going to have to do a raise at some point. Probably trades close to 4 times revenue, which is too expensive, probably getting more expensive given this miss. There's just nothing to like here. I mean, everybody was gaga over the stock a couple years ago. We actually talked about it being ridiculous in terms of valuation, and the valuation is still at 7 and change, still a little excessive. So I still think there's room to the downside in the stock, unfortunately.
Just if you want to be long the stock, you must believe that the public investment fund, which owns 60% of the company, will just step up and pay whatever they need because they will run out of money without that.
Yeah. All right. There's a lot more fast money to come because it's coming up next.
The hope is that the Saudis will bail out Lucid and just keep giving them money and hopefully kind of go that route. Maybe at some point in time they just take the whole company public, folks.